Something happened in the last few weeks that most people completely missed. While everyone was busy scrolling through social media and arguing about politics, the financial world quietly flipped a switch. Gold crossed a price level that hasn't been seen in years. The US dollar started slipping in ways that make serious investors nervous. And then silver, the metal that most people forget even exists, started doing something absolutely unexpected. Something that, if you understand what it means, could be one of the most important signals you hear all year. Now, I know what you're thinking. You're thinking this is just another buy gold video. It is not, because this time the story isn't just about gold. It's about what silver is quietly whispering to anyone paying close attention. And here's the thing. When gold and silver stop moving together, history says something big is about to happen. I'm not talking about minor market fluctuations. I'm talking about the kind of shift that changes how wealth is preserved and destroyed. So if you have any money, any savings, any interest in what's coming next economically, you need to stay with me for the next 10 minutes, because by the end of this video, you're going to see the full picture that mainstream financial media is completely ignoring right now. Let's start with gold, because that's where this story begins. Gold recently surged past $2,300 per ounce, and some analysts are already projecting it could push toward $2,500. Now, for context, just a couple of years ago, gold was sitting comfortably around $1,700. That's a massive move, and it didn't happen by accident. Gold doesn't surge like this unless the people who move serious money, the institutional investors, the central banks, the hedge funds, are deeply concerned about something. And right now what they're concerned about is the US dollar. The dollar has been weakening steadily, and this isn't just a short-term blip. The dollar index, which measures the dollar's strength against a basket of other major currencies, has been declining. And when the dollar weakens, gold almost always strengthens, because gold is priced in dollars globally. So a weaker dollar means gold becomes cheaper for foreign buyers, demand rises, and the price goes up. But here's where it gets more interesting, because that relationship alone doesn't explain the full picture. There's something else driving gold higher, and it has to do with trust, or more precisely, the erosion of trust in the entire financial system. Before we go deeper, if you're finding this valuable and you want to understand how money actually works in the modern world, hit that like button right now and subscribe to the channel. We break down complex financial stories in plain language every single week, and it's completely free. Now let's get back to what's really happening. Central banks around the world, China, Russia, India, Turkey, Poland, they have been buying gold at a pace we haven't seen in over 50 years. In fact, central bank gold purchases have broken records in recent years. Why would central banks be doing this? Because they are quietly, deliberately reducing their dependence on the US dollar. This is a massive geopolitical story wrapped inside a financial one. These countries are hedging against a dollar-dominated global system. They are preparing for a world where the dollar may not be the undisputed king of global trade. And gold, to them, is the ultimate insurance policy. It has no country. It can't be sanctioned. It can't be printed out of existence. So when you see gold rising, you're not just watching a commodity go up. You're watching a slow-motion vote of no confidence in the current global financial order. Now here is where the story gets really fascinating. Because while all of this is happening with gold, silver is doing something different. And that difference is the signal that very few people are talking about. Historically, gold and silver move together. When gold goes up, silver goes up. When gold crashes, silver usually crashes harder. They are connected. But in this current gold surge, silver has been lagging behind. And that gap, that disconnect between gold's rise and silver's hesitation, is being closely watched by analysts who know what it tends to mean. Right now, the gold to silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, is sitting at an elevated level. Historically, when this ratio gets this high, one of two things tends to happen. Either gold eventually pulls back and comes down towards silver, or silver eventually catches up and explodes higher to close the gap. And the second scenario, historically, has been far more common. Think about it this way. Silver is not just a precious metal. Unlike gold, which is mostly just held and stored, silver has massive industrial demand. It's used in solar panels, electric vehicles, semiconductors, medical equipment, and smartphone technology. So silver tells you two stories at once. It tells you a monetary story, like gold, and it tells you an industrial story about the real economy. When silver is hesitating even as gold rises, it's signaling something important. It's saying the real economy is not as confident as the financial markets. It's saying that industrial demand may be softening, that manufacturers are not stocking up, that global growth expectations may be cooling. Silver's silence right now is not laziness, it's a warning. But here's the other side of that coin, and this is the part that actually excites many seasoned investors. because if the economy eventually stabilizes, or if the green energy transition continues to accelerate, silver's industrial demand is going to explode. Solar panel installations require an enormous amount of silver. Electric vehicle production requires silver in the battery systems and electronics. And the world has collectively committed to transitioning away from fossil fuels, which means silver demand from the industrial side is structurally growing. The supply of silver, meanwhile, is not keeping up. Mining silver is expensive, new discoveries are rare, and a significant portion of silver supply comes as a byproduct of mining other metals like copper and zinc, meaning silver miners can't just ramp up production overnight. So you have this setup where demand is set to rise significantly, supply is constrained, and the price is still relatively cheap compared to gold. That is the message silver is sending. It is not flashing red, it is flashing opportunity, but only for those who understand the timing and the context. Now let's zoom out and look at the macro picture, because this gold surge and dollar weakness doesn't exist in a vacuum. We are in an environment of continued uncertainty around Federal Reserve interest rate policy. For a long time, higher interest rates were considered gold's enemy, because when rates are high, people can earn decent returns just holding dollars or bonds. Why hold gold when cash pays you? But something shifted. Despite rates staying elevated, gold kept climbing. And the reason is simple. People stopped trusting that the Federal Reserve would actually get inflation fully under control without breaking something in the economy. The national debt of the United States just crossed $34 trillion. The interest payments alone on that debt are now over $1 trillion annually. That number is staggering. It exceeds the entire U.S. defense budget, and it keeps growing. When investors look at that, many of them quietly accept that the U.S. will never truly pay off that debt in real terms. That the long-term strategy will involve some level of inflating the debt away. And that expectation of long-term dollar devaluation is exactly what sends people, institutions, and entire governments reaching for gold. Here's what this all means if you're a regular person trying to navigate this environment. First, gold's rise is not a bubble. It is a reflection of deep structural concerns about fiat currency and global financial stability. Second, the dollar's weakness may not be permanent, but it is meaningful, and it is telling you something about where we are in the economic cycle. Third, silver's divergence from gold is not a sign that silver is broken. It may actually be the setup for silver's next major move. And fourth, none of this means you should panic, sell everything, or make rash decisions. What it means is that you should be paying attention, that you should understand the signals that the market is sending, and that you should think carefully about how your savings and assets are positioned in a world where the rules of money are quietly being rewritten. Because here's the reality. The people who understand these signals early are the ones who have options. They can make decisions calmly, with information, without being forced to react when things get chaotic. The people who ignore these signals are the ones who wake up one day wondering why their purchasing power feels like it quietly evaporated overnight. This is not about fear. This is about awareness. And awareness in finance is worth more than almost any single investment you can make. So here's what I want you to do right now. Drop a comment below and tell me, are you watching gold and silver, or are you staying out of precious metals entirely? I genuinely want to know where you stand on this. And if you know someone who is trying to understand what's happening with the economy right now, share this video with them. Seriously. Send it to a friend, a family member, a colleague, because understanding these signals could make a real difference in how they approach their financial future. The more people who see this clearly, the better conversations we can all have about where things are heading. Gold is surging because the dollar is weakening and trust in the system is eroding. Silver is sending a different message, one of industrial caution today and potential opportunity tomorrow. Together, these two metals are painting a picture that is worth far more attention than they typically get in the mainstream conversation. The market is always speaking. The question is whether you're listening, and now you are. Stay sharp, stay informed, and we'll see you in the next one.